Welcome back to this very important CNBC-TV18 conversation. I have been speaking with Dr. Roland Busch, the President and CEO of Siemens AG. Well, to come back to the order position and the markets, how are your exports doing? I believe Siemens India is the second biggest exporter in the world of Siemens products. Can you give us an idea of whether you want to increase that?
Yeah. So take electrical products, very competitive products, competitive costs in a localized market. So therefore, obviously, we use that leverage in order to export it. I do have appetite for more. It's great to have a local market where your local products and manufacturing can scale, but it's even better if we can leverage into other markets too. We have exports to Middle East, for example, yes. A huge demand for electrification. I can think about also the ASEAN market if that grows. So the potential is huge. We talked about mobility. If we can export, we're exporting already bogies, but I can also imagine manufacturing metros for the local market, but also for a global market, because the demand for the type of cars for the local market in India is matching quite well to the demand from other markets too.
Okay. We already have the plant in Aurangabad. You have invested in that. Is that already an export?
Oh yeah,
you're already exporting from there.
Bogies, we already exporting. We are using that for other places. Next step would be again the higher value, which is locomotives or trains, and then go along.
Yeah, actually, this year you'll have invested 10 billion rupees, I believe, in capex in India. What are the plans? Will this scale up?
No, we said that for the next 5 years we are investing another 110 million euros in the market. This is a clear plan. Okay. The faster we grow, the bigger the number can get, because we do believe that this is a market which is worthwhile investing. We see good returns. We have a very good customer relationship. Is it government customers, private customers? We have strong partners, a lot of momentum in the market, so therefore that should not be the limit.
No, there won't be a limit for orders that come from India, because India is in that stage.
True.
What I'm asking is, will you look at more export-oriented investments in India?
Absolutely, absolutely.
And will it go beyond bogies and the plant in Goa?
As I said, electrical products, this is a demand which we see globally, and the capacity, just talking data centers, for example. I mean, this is mushrooming, and you see so much demand. We will use all our capacities which we have on a global basis to really serve this market, local and global. So therefore, yes, I do believe that for India, we do export from India to other regions, but this is a potential for definitely more, absolutely.
Okay. More products also?
Yes, absolutely, likely. More products, sure.
Okay. At the moment, your plants in Goa and Aurangabad export. Are you looking for plants elsewhere, or will there be brownfield expansions here?
We have 32 manufacturing sites. So therefore, this is quite a bit. Yeah. Ideally, you go brownfield expansions. That's what you normally do. If there's a need to build a new one, why not? The market is big enough.
Okay. There is it's not a change in government, but it's a government with a slightly lower majority than previously. How do you view it in terms of orders coming in?
So I learned for the last days, and the feedback what I got is that nothing really changes too much. I also learned that the key ministers are the same as before. They do a great job, by the way, very competent people. So going forward, I think the successful strategy of the last years is just prolonged for the next wave. What does it mean? It's investing in base infrastructure. It's investing in new technologies, or supporting the inflow of direct investments into new technologies. We love that. But it's also really building not only the tier ones or the OEMs, but also the supply chain, tier one, tier twos, suppliers. So therefore, for me, that's just a continuation of what we saw in the past. Rightfully though, because what you see in terms of growth is basically the fruit of a proper investment strategy of the last years.
Okay. Well, finally, let me come to the power sector. Surprise, surprise, India is short on power. This year, we had a terrible summer, and there were very clearly power shortages staring at us. Can you talk to me about the power sector demand that you see and what you want to service, both renewable and others?
This is more a question for Siemens Energy,
Yes,
because they do renewables, they do power plants, and they see a huge demand, in particular in gas, but also in transmission, high voltage transmission, massive demand also from India, HVDC kind of transmission lines. But also the wind market seems to have a huge demand. So therefore, from that perspective, I think this is just going. The hunger for energy in India on that growth and also industrial growth is so big that I believe that hydrocarbons still play a role. I do know also nuclear power, which is, I think you have to fire on all cylinders, particularly on those which are not emitting, but there's a certain need. And there's another element in it, which don't forget, India is a very, very strong net importer of hydrocarbon material, oil, gas. Every gigawatt you install in renewables reduces the dependency and makes India self-sufficient or self-reliant on energy. This includes also storage. We talk about hydrogen, which is basically storage of intermittent renewables. So therefore, the logic and the strategy, which I see the handwriting of the government, of driving this renewable agenda, driving also hydrogen, is not only the way to go for a greener economy, which is very important for export.
That's right.
Because once we want to export in Europe, you need to have a green footprint of your products. But it's also helping for your self-reliance.
Oh yes, we are at the receiving end of climate reverses. So I take your point entirely. And kind of crude proofing our external balance has been one of the government's goals, and I think we are almost proofed now. The crude price doesn't move our current account deficit much, but yes, I mean it's far less than it used to be. It used to be a very big element of our current account. Let me end by asking you about the global environment again. How confident are you of global growth? Ultimately, India also grows only if the world grows in a robust fashion. What's your sense? Recently, both the IMF and the World Bank upped the global growth forecast by a smidge, by about 20 basis points to 3.2%, if I'm not mistaken.
Yes.
But you're in a better position because you feel the pulse of world investors. Do you think the world is in a good spot in terms of growth for the next couple of years?
So I do not have a better number than the 3.2% which you mentioned. So from that perspective, I do believe there's a potential for this growth. Yet there's maybe one element in this growth number. I do believe that the world has an embedded inflation. Where does it come from? Number one is the operating model of the world in the past was if you want to manufacture something, bring it to China and leverage, make a labor arbitrage and optimize a value chain. It seems that there's a lot of reallocation of manufacturing. China will still grow, it's a big market, 30% of the industrial GDP sits there, and it will grow, but there will be a relocation of products, of manufacturing. This, at the beginning, costs you more money than incremental investment on an existing base, number one. Number two, the energy transition we are talking about is shifting from an OPEX model, build a cheap gas-fired power plant and pay the price for the gas, to a CAPEX model, which means more expensive renewables, but no operational costs later. So this pulls investments ahead, which is another embedded inflation. So therefore, I see that this is happening, at least for the next, whatever, let's say 10, 15 years. And then obviously once you have your assets written off, then you enjoy a lower energy price. So this we have to take into consideration. Sustainability transition is also costly in the first aspect, so we have to also look for how the investment. I'm not saying that green products are per se more expensive than others. If you do it right, you have a huge opportunity. So therefore, that's one part of the equation. On the other side, we see the average income for India is still so low, so you have a huge potential of having a more stronger middle class building up, which is again stimulating also private consumption alike, which is in the other side. So therefore, a mixed bag of different parameters ending up in a 3.2% growth, which I think it's likely, and that would be good.
Okay. Thank you very much, Dr. Roland Busch. I wonder if your doctorate is in economics, because you
physics.
speak like an expert on economics as well. Thank you very much. The message is that a lot of good orders coming in from India. India could be a further export base for Siemens products. Global growth modest, 3 to 3.5%, and inflationary. I think that's a message that we have to take on board. Thank you very much, sir.
Thank you.